Welcome back to Investing Talk Podcast. Today, we're looking into TMD Energy. And this one's pretty interesting. It's a company that seems to be standing at a real crossroads, mixing its traditional business with a surprising jump into some high-growth areas. Our mission today is to unpack TMD Energy. We'll look at recent financials, their core operations, and importantly, analyze that huge surge we've seen in its stock lately. We want to pull out the key insights for you, help you understand what's driving these moves, and think about what it might mean going forward. And hey, if you find this useful, maybe consider subscribing, liking, commenting, or even buying us a coffee. It helps us keep doing this.
It's definitely a fascinating case study, a company trying to navigate some pretty big shifts in its industry. And the data we've got paints quite a picture.
Okay, well, let's start with the basics then. For anyone maybe not familiar with TMD Energy, what is it they actually do? What's their main business?
So, at its heart, TMD Energy is an integrated bunkering services provider. Think of them like a crucial piece of the maritime supply chain. Sort of a gas station for ships, but way more complex than that. They do ship-to-ship marine fuel transfers, they handle ship management services, and also vessel chartering. Geographically, they're mostly focused on Malaysia and Singapore, operating across, I think, 19 ports, serving like 92 customers.
19 ports. Okay.
And what's really important is their integrated model. It's not just selling the fuel. They manage the whole thing, supply to delivery. That gives them a real edge, logistical efficiency, cost advantages. And this is a highly regulated, very competitive field.
Right. That integrated approach makes sense for efficiency. But before all this recent market action, how are they doing financially? Were things steady, or what did the numbers show before the surge?
Well, before this recent jump, the financials showed a company with pretty steady, reliable growth, actually. For their fiscal year 2024, revenue was nearly $689 million. That's up about 8.8% from the year before. You can see a consistent growth trend over 3 years. Their total assets, for instance, showed a 2-year compound annual growth rate, the CAGR, of almost 16%.
16% CGR on assets. Okay.
And a big driver for that top-line growth was their bunkering services segment. That alone added about $55.5 million in revenue in FY 2024.
So revenue is definitely looking healthy, but, revenue is one thing, profit's another. Was that growth actually hitting the bottom line?
Profitability.
Yeah.
That's a more nuanced story.
Yeah.
And it's where you start seeing some interesting, maybe strategic shifts happening under the surface.
Yeah.
Net income for FY 2024 was $1.9 million, which was almost flat compared to the $2.0 million in FY 2023.
Flat net income. Okay. So very thin margins then.
Yeah.
Very thin net margins, yeah. Which, honestly, is pretty standard for this industry, usually around 2 to 4%. But if you look a layer deeper, their gross profit was $16 million. That's up almost 33% year over year. Big jump. And their gross margin improved, too, from 1.9% to 2.3%. Still thin, but better.
Okay. Improving gross margin is good.
But here's the really telling part. Their income from operations. So, profit just from a core business before interest and taxes, that shot up by over 130% year over year.
Whoa, 130%. That's huge.
It is. It wasn't just good management, though. That's part of it. It strongly suggested TMD was already shifting towards higher margin activities or getting really effective at controlling costs. Kind of a quiet revolution happening before the big headlines hit.
That really suggests they were becoming much more efficient operationally. What about cash flow? Cash is always key.
Absolutely. And cash from operations showed a massive improvement, a 2-year CAGR of over 584%. Yeah. It's a really strong sign of improving liquidity. Shows the company got much better at generating actual cash from its day-to-day business. Speaks volumes about their internal financial health.
That's definitely impressive growth in cash flow. But I know listeners often look at things like PE ratios, debt to equity. Could we find those?
That's a good question. And yeah, those key metrics like the price to earnings ratio, how much investors pay per dollar of earnings, or debt to equity, which shows reliance on debt, they weren't explicitly available in the info we looked at. It's mainly because TMD Energy only listed on the NYSE American pretty recently, April 21st, 2025. So for real-time PE or precise debt figures or even return on equity ROE, which measures profit generated from shareholder investments, you'd really need to check live market data or their latest SEC filings, the official reports companies have to file.
Okay, so that data might still be emerging post-listing. So we've got this picture. TMD Energy with a solid traditional base, steady revenue, improving operations, strong cash flow, but thin net margins. But if that's the past, the last few weeks seem to be screaming about a different future. What on earth happened to send the stock price vertical like that? This is where it gets really interesting, isn't it?
You're right. The market action has been pretty wild. The stock just surged dramatically in the past week, particularly Friday, June 13th. Shares went up as much as 83% in one day. The closing price hit $1.31, up from 2.41 the day before. That's over 75% gain in a single session.
75% in a day.
Yeah, and remember, the IPO price back in April was $3.25 per share. So while it's shown strong gains recently, the volatility has been extreme, daily swings over 60% sometimes. It's been quite the roller coaster.
That kind of surge is just incredible. What specifically triggered it? Was it just general optimism, or were there concrete events driving such a rapid rise?
No, this wasn't just sentiment. It seems directly tied to several key company announcements, signaling a really significant strategic pivot. First, they launched a new eco-friendly initiative aimed specifically at transforming the renewable energy landscape. That got a lot of attention.
Okay, renewables.
Second, they announced strategic partnerships with federal agencies, focused on developing next-gen solar solutions. Collaborating with government bodies like that often signals strong backing and big potential.
Right. That adds credibility.
Third, there were announcements about proprietary clean energy technology they're developing. That, plus the Eco Initiative, created this wave of optimism about their future in sustainable tech. And finally, recent reports highlighted liabilities actually decreasing despite higher operational costs. That points to good financial discipline, boosting investor confidence.
So it's a combination.
Yeah.
Renewables initiative, government partnerships, new tech, and good financial housekeeping.
Pretty much. And what ties it all together is this insight. The market seems to be buying into TMD Energy's reinvention story, from a traditional maritime service firm to potentially a serious player in green energy.
That's quite a narrative shift. But for a company so rooted in traditional bunkering, how plausible is this transformation into a tech-focused clean energy company? How do these moves actually stack up in the wider market context?
That's the big question, isn't it? And if you connect it to the bigger picture, well, the whole energy sector is rapidly moving towards renewables because of global decarbonization efforts. Everyone knows that. TMD's recent moves position it quite well, aligning with these massive macro trends. And collaborating with tech-focused firms helps differentiate them from competitors still stuck in legacy fossil fuel operations. Investors looking for growth in clean energy seem to have really responded to this proactive approach. It looks like they're trying to future-proof the business.
Okay, so it's like TMD is swapping its old work clothes for a new green energy outfit. That's quite a change. Looking at the company overall now, what are its core strengths and advantages, especially with these new initiatives layered on top?
Well, their operational efficiency and cost control are still definite pluses. We saw that in the improving gross margins and that huge jump in operational income. Their strategic footprint across multiple ports in Malaysia and Singapore, with a diverse customer base, that still provides resilience in their core business. The vertically integrated model, focusing on reliability, compliance, that gives them an edge over, say, smaller or less stable competitors like Sinanju Tankers or Bright Oil Petroleum. And while they might have seen themselves as a challenger before, they were already showing above-average revenue growth.
Right.
And now, this move into eco-friendly tech and clean energy, backed by those partnerships, it opens up totally new potential revenue streams and positions them for growth in a sector that's clearly the future. It's a mix of established stability and, well, ambitious new direction.
Sounds like a solid foundation with some exciting new construction on top. But with such fast moves and new ventures, there've got to be risks, right? Red flags listeners should watch out for. What are the cautions here?
Oh, absolutely. There are definitely points to be careful about. Financially, yes, revenue strong, but that net income is still quite low. $1.9 million on almost $689 million in sales. Those thin net margins, even if typical for bunkering, it's still a small profit base relative to the volume. Also, the lack of really detailed, easily accessible info on their debt levels right now, that's a bit of a concern for fully assessing risk. You need that clarity for financial stability checks.
And what about the stock's behavior itself? That volatility must be a risk factor too.
Definitely. The high share price volatility is a major market risk. If you look at technical indicators, the relative strength index, the RSI, it's elevated, around 73.
Which suggests it might be overbought.
It often suggests that, yes. implying it could be due for a pullback or correction. Plus, you see wide Bollinger Bands, which basically signal high volatility, bigger price swings are likely. So these suggest potential for sharp drops or just continued unpredictable movement.
Okay, so market risk is high. What about operational or external risks?
Well, their core bunkering business is still exposed to volatile fuel prices. That's just inherent. And there are always stringent environmental regulations impacting operations. Geopolitical tensions could mess with supply chains, and global shipping volumes can fluctuate with the economy, affecting demand for their services. And one more point on transparency. As of mid-June, there weren't any recent SEC filings readily found that could limit the detailed official info available to investors right now, something to keep an eye on.
Okay, so plenty to consider on the risk side. Given all this, the strengths, the pivot, the excitement, the risks, what should listeners be watching for next from TMD Energy? What are the potential catalysts?
The next quarterly earnings report is definitely going to be crucial, especially after the strong FY24 results and all this recent market activity. Investors will want to see if those improved gross margins and operational income gains are sustainable. Can they keep it up? Also, any news about potential expansion, new ports, new service lines, either in bunkering or the new clean energy side, that could certainly act as a catalyst for further growth.
And what's the general feeling in the market right now? Is the sentiment positive, negative, skeptical?
Well, recent news coverage has been overwhelmingly positive. It reflects that excitement around the strategic pivot we talked about. If you look at social media chatter, for example, there's a lot of optimism about growth, especially tied to Southeast Asian shipping and these renewable initiatives.
Yeah.
But, you always have to be cautious with unverified rumors about new partnerships or tech breakthroughs. Stick to official company statements. Analysts seem to be getting more bullish because of this diversification and the green tech angle. But they're also all pointing out the high risk due to that extreme volatility.
Right, the volatility is the elephant in the room. So, putting it all together, core business, ambitious pivot, financials, risks. What's your current take for listeners thinking about TMD Energy?
Based on everything we have right now, I'd lean towards a hold recommendation. Here's the thinking. The company gives you exposure to that growing Southeast Asian maritime market. They've shown real revenue momentum since listing, and profitability metrics are improving. That's good. However, like we said, net profit is still slim compared to the sales volume, and the details on their debt, their leverage, aren't crystal clear yet. The recent stock surge, it might be partly market excitement, maybe some exuberance after the good results and the pivot news. It might not be a sustainable re-rating unless future quarters really prove these margin gains can stick and grow.
So, for someone listening, what's the practical advice if they hold it or are thinking about it?
I'd say monitor upcoming financial disclosures very closely. Look for clarity on debt levels and on earnings per share, the EPS. Getting that clarity before making any big moves like aggressive buying seems wise. But if you already hold a position, given the sector tailwinds and these early signs that they are executing on their strategy, holding on seems reasonable. It's kind of a watch and wait situation right now.
That feels like a very grounded perspective on what's clearly a dynamic situation. So to wrap up, TMD Energy is this really fascinating example of a traditional company making bold, high-profile moves into renewables. It's caused a huge market reaction, but also brings significant volatility. And maybe a final thought for you to consider. As TMD Energy navigates this exciting but definitely volatile pivot, how might their journey reflect the bigger challenges and maybe opportunities facing traditional industries everywhere as they try to adapt to a greener future? Something to think about. Thanks for joining us on this exploration today.